Now, if you're new to the crypto space, or like me, you got into the crypto space based on the whole moon hype, to the moon. But like me, you found yourself losing more money than you actually hoped to. Well, in this video, I'm going to be sharing the best low-risk strategies for cryptocurrency trading that has been working for me, and most likely will work for you as well. Let's get started. Hey Babylonians, welcome to the Babylon Trader channel. This channel bases on the principles of wealth gotten from the book The Richest Man in Babylon. So in this channel, no, we do not focus on trading to the moon. No, we don't do that. No, I focus on bringing you the safest and least risky trading and wealth creation strategies out there. Cause trust me, those little wins, they tend to add up really fast. You'll be so surprised. If you're new to trading or even an experienced trader, The Richest Man in Babylon is one book I seriously recommend to anyone and everyone going into the crypto space. So join me as we explore its principles and see how we can apply it in our trades. So I'm not going to be talking about the next 10x coins, the next 100x coins or all those junk. No, I'm focusing on trading strategies with realistic returns. And also, I'm focused on risk management than greedy profits. Having a well-developed and proven strategy while trading cryptocurrencies is a very important thing for making profits in the crypto market. So without wasting any more of your time, here are my 4 best strategies for trading crypto. The 4th on my list is the traditional HODL strategy. HODL meaning hold on for dear life. It's a customary trading term for just buying and holding onto a coin for a long period of time with hopes of appreciation, aka mooning. Now from experience as a trader, I can tell you that buying and holding ends up generating much better returns than actively day trading, provided you get in at the right time. And to get in at that right time, you need some basic knowledge of basic technical analysis. Not much, just the basics. To give you an example, let's head on to TradingView. Alright, we are here on the TradingView chart. This is the Ethereum chart on TradingView. This is a free platform, so you do not really need to make any subscription yet unless to set up alarms or something else or need way more indicators. But in the free version, you are allowed to use 3 indicators. So in this case, I am going to be making use of the EMA. Right now on the chart, what we are seeing, let me put up the charts. So right now on the chart, what we are seeing, these 2 lines, you can see the green line represents the 20 EMA and the orange line represents the 55 EMA. So now the buying and HODL strategy, a very simple strategy to do this is simply buying or looking to buy when the 20 EMA being the green line crosses above the 55 EMA being the orange line, and you will be looking to exit when the 20 EMA being the green line crosses below the yellow line. Doing this consistently will assure a high level of profit. Now, if you can look at the examples from 14th December 2020 up to September the 12th 2021, let us put back the candles. Now, assuming you had entered the trade in December and got out at March, you would have been up 143%, which would have been way more than most traders in the market from just buying and holding. Again, well, also remember that not all entries are going to be prime entries. There are going to be some losses, but as long as you stick to the daily time frame, you should end up making way more gains than losses. This is an example of a loss. Let me put up the candles so you can see that there was a sharp cross up and cross down in this area. Now, in that case, after doing that, we recorded a loss of 8.05%. But then after that, putting back the candle, you can see that by the next time we got an entry position and exited when the lines crossed. We are bringing it down here because we are looking at the candle that brought the EMA down, where the candle closed. So the candle closed somewhere here. So this is where we're actually calculating our profit margin, and you can see that in the space of, let's see, in the space of 56 days, you would have actually been up 39% extra. And then looking for another prime entry, you could see another place where the 20 crossed the 55. And if you had gotten into that trade and rode along till the next cross down, you would have been up another 41% in the space of, let's see, in the space of 48 days, you would have been up another 41%. So this shows that as long as you are patient, as long as you're willing to hold on for the long term, this is an indeed profitable strategy. Very simple. A layman can actually make more profit than a professional trader using very simple strategies that, have a long-term focus, than looking for short-term strategies which you end up being subject to market volatility, and you end up maybe losing far more than you gain. Now, the third on my list is smart trading. Now, without going into much of the technical details, smart trading basically lets you set stop loss and multiple take profits at the same time. For those who don't know their functions, a stop loss basically is an order instructing your coins to be sold or trade to be closed when the price of the coins go below a certain price point. You would be closing at a loss, yes, but it is used to protect your funds from total liquidations or even higher loss should the market or your predictions go wrong. Inversely, take profits is an instruction to sell your coins at profit once the price reaches a certain price point. However, the good thing about smart trades is that you can actually set multiple take profit targets as well as activating trailing take profit, which means that once the price gets to your target take profit, it keeps trailing the price as it keeps going up based on the price deviation you set in place. Let us head on to TradingView, or better yet, TreeCommerce, for a clearer example. Alright, so now we are over at the TreeCommerce trading platform. We are in the smart trade area. Now this is what it looks like. It basically looks like your basic trading terminal in the different exchanges where you see the chart, the order books, what else? Okay, now this is where you can set your particular trade type. The good thing about smart trade, as I said, is that you can set your buy price, your target take profit, and your stop loss all at the same time without actually starting the trade yet. So now looking at this chart, this is the Ethereum 1 hour chart if I'm correct. So assuming I had wanted to get into a trade here, it is at 3,478. I could, okay, you have the option to either smart trade, smart sell, smart cover, smart buy. I will explain this in other forthcoming videos. For now, let's get into the brief summary of what we are here for. So this is where you place your trades. Assuming I wanted to buy, you have the option of limit buy, market buy. So right now I prefer putting as market buy to just get my order filled immediately. So this is the price, the current market price. So you are the one that decides how much of your assets, how much of your funds you would want to allocate to this particular purchase, from 5%, 10%, 25%, 50%, and 100%. Assuming I wanted to set it at maybe 50%, note that I don't really have any funds in this account. Right now it's linked to my KuCoin account, and I only have 4 USDT free. So assuming I wanted to use, okay, maybe 100% of my funds, that is what it is bringing out for me here. Yes, so the 100% of my fund being 4 USDT, 4.2 USDT. I could come then set my target take profit. Right now it is set at 10%. I could either toggle this to increase my target take profit to, it can go up to I think 300%. It depends on how long you are willing to keep the trade open for, or you can also reduce it to even 1%. It goes there. Now the good thing about it is, assuming I am setting it at, maybe I look at my chart and I am expecting maybe yes, this is a 3% increase. Okay, let's go into a longer time frame.
let's look at the 4 hours. 4 hours is still not good enough for me. I will be looking at the daily time frame. Alright, so assuming this is a leg up, then a pullback going for another leg up. Maybe I am expecting the price to get to here, 3,975, which is a 14% increase. So I could set my target take profit either by price. I could go there, I could go to my target take profit, put in the figure 3,975, or I could just toggle this or come here and put in 14%. It will take me very close to there. Okay, that was 14.22. If I so pleased, it brings me to 3,970, very close. The good thing about smart trade, as I said, is you can set multiple take profits, so you can actually split your targets. Now clicking on the split target, you can see that I can set the volume I would want to sell at this particular percentage increase. Now is at 25%. I could toggle it down to 1% to 100% of my funds, or back to maybe 25% where it was. So assuming I had 4 target take profits, I could set it to sell 25% of my holdings at a 14% increase, then add another target that has been saved up there. You can see it, sell 25% of my holdings at the price 3,975. I can set other split targets, maybe increase the next to be maybe at maybe a 20% increase when the price gets to 4,175. I could set that as well. Then maybe another 30% increase when the price is at 4,526. Split it again. So now you can see I have 3 target take profits, but it has to be complete. 100% of your funds have been completely utilized. So let us set another profit target at maybe 50% of where it is at this moment, being 5,223. 25%, the last 25% volume of my funds, and that is the final TP target that I can add. So you can see I have no other option to add more targets because 100% of my funds have been utilized. Then the next good option, as I said, is the trailing take profit option, where assuming the price goes up 50% and hits my final take profit target and still keeps going up, I do not want to lose that profit potential, so I could come and set a trailing take profit. Here's the details. Trailing take profit gets activated after reaching the set profit level. It starts to follow the price after activation. We'll follow the price movements up. We'll follow the price movements up when used with smart trade and smart sell. Blah 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 blah. The basic gist of it is that it will keep following the price up when it hits that final take profit based on the price deviation we set. So right now it is set at a 5% price deviation, meaning that it will have to come down 5% before you are completely stopped out from the trade. So right now it is set at a 5% deviation. I could set it at a minus maybe 1% or 2%. Let's leave it at 2%. So that is it. And then we could come also and set our stop loss. Yes, we could set, now you can set your stop loss based on percentage or based on a particular price you deem fit. So now looking back at the chart, looking at the next support level at 2,714. So we could go set our stop loss to that particular price, 2,714 to 714, which is a 21% decrease. Now your stop loss has been set to stop you from losing much more funds should the price of the Ethereum keep going down past your particular stop loss region. That is the essence of stop loss, to protect your funds. Also, you can set a trailing stop loss. This basically means once this is on, the more the price goes up, the higher your stop loss goes. So assuming the price goes up from here, going up to maybe 4,000, your stop loss being 21% behind, also still goes up, keeps moving up, following the particular price range. So that increases your stop loss threshold, meaning that your stop loss could actually now go into profit before the market goes down. Peradventure the market goes down, you are now stopped in profit rather than in a loss, which is a very cool feature, okay, which is why I truly recommend Smart Trade. You can see it makes trading a whole lot easier, helps in risk management to actually reduce your loss, and also, okay, with the trailing stop loss, you actually could reduce your loss, and with the trailing take profit, you could actually increase your profit potential. This is why Smart Trade is the third on my list of the safest trading strategies. So right now that everything is set, I could just click on create trade. I don't know if $4 is enough for a trade to be open, but let's see. Okay, I guess it was enough, which is good. So that is basically it for the smart trading strategy.
Now, there are several platforms that enable you set up smart trades, the most popular platform being TradeCommerce and BitGap. But these are premium platforms, meaning you'd have to subscribe to make use of their amenities. However, TradeCommerce offers you one free smart trade in their free version, so I recommend using TradeCommerce if you'd like to test it out with a live ammunition. And by live ammunition, I mean live funds. However, BitGap offers a demo account, which is very useful. So you can try running smart trades in their demo account, meaning you won't need to sacrifice your own funds to test it out. Now, my second safest, most used and most recommended strategy is automated trading. That is using trading bots. I love using trading bots. In fact, most of the videos in this channel are in one way or the other gonna involve using trading bots. If done right, they provide a much safer way of trading, as it eliminates human emotions and works solely based on set parameters. Oh, and they also function 24/7 while you sleep, while you are awake, no matter what. So depending on how you set them up, they can provide a great means of semi-passive income, as well as a great hedge against risks. Here's an example using the same Ethereum chart we used in our HODL strategy.
Now, I'm not going to get into the full details of how bots are being set up. You will get that in my next coming videos. But looking back at our buy and HODL strategy, where you were told to buy when the EMAs are crossing up, when the 20 is crossing above the 50, and selling when the 20 is crossing below the 55. It's going to be stressful timing the market to know when these happen, which is a very difficult thing to do. Well, not really difficult, but it takes a high level of persistence to check in, day out. But the good thing about it is that if you subscribe to TradingView account, you have the option to actually set alarms for when such things happen, which is also very good. These are my set alarms. They have been stopped, some triggered and all, but not getting fully into it yet. But you could actually set alarms to notify you both through your emails, through the TradingView app, and so on, of when such an event were to ever happen. I will show you how to set it up in forthcoming videos. Okay, if you want such videos, just signify down in the comment section and I will make that video just for you. Alright, that being good and fine, you may miss the notifications when they come in. But what if I told you you could actually configure bots to automatically buy for you on such opportunities, to buy for you immediately such a crossover happens, and sell for you when the crossover down happens, doing this consistently, repeatedly for the rest of your natural life, meaning you do not actually have to go through the hustle and bustle of the trading itself. The bots actually perform those tasks for you. Well, that is what TradeCommerce once again is here for. Going into the DCA bot settings, this is my active bot at the moment. This is my Sol USD perpetual bot. let us see its performance so far. Alright, so you can see that it's been on an uptrend. It's been gaining for me consistently based on the parameters that I set for it. So right now it has had a couple of green days, and right now it's still at a trade that it hasn't closed, but it does not close a trade until it is at a profit, which is a very good strategy. Yes, so you could actually configure a bot that could buy for you when such a crossover happens and sell for you when such a cross down happens, not just for the EMA but for every other indicator strategy on TradingView. And trust me, there are thousands of indicators. These are just my favorite indicators, but there are thousands and thousands of indicators going down. So depending on the particular strategy you would want to utilize, you could actually set up bot to do the trading for you. Although I don't always recommend doing that, because the downside being that you are not fully in view of what your bots are actually doing, because there are going to be some negative buys, there are going to be some losses. But that is why I always recommend using the daily time frame. Longer time frames have greater buying opportunities, as you could see in these examples I gave here. So you are more likely to make profit making use of the longer time frames. So this is a game of patience, as I said. This is the best way to keep it simple and gain in the crypto space without actually risking much of your capital to the market volatility. Focus on the longer time frames. Get that cool long-term cash, that long-term profits.
Now there are different types of bots, but the most common are the DCA bots and the grid bots. We'll go into more details on this in the coming videos. However, it is important to note that of the 3 strategies listed so far, bots generate the least returns, but inversely provides the greatest form of risk management and funds protection amongst the rest. And remember, the aim of this channel is focusing on the safe, little, consistent incremental gains. No fast money principles here. Now, the safest, and I mean the absolute safest way to invest in crypto is crypto lending. Now, do you want to earn passive income while you're holding coins? Crypto lending is a perfect option. If you're a crypto investor, crypto lending can provide you with immediate returns, and you don't even have to sell any coins. At the time of making this video, KuCoin, which is my second favorite crypto trading platform, is offering annual percentage rates of 25% if you're willing to lend out your USDT crypto, which is very massive. 25% returns in a year. Which bank can actually give you that same returns? And is most beautifully risk-free. Well, I won't say completely risk-free, but then your funds are not tied down on any trades. You are not making any trading calls yourself. You are actually just giving the platform your coins to lend for you at a profit. So you sit back and enjoy your returns on your working capital without actually making any risks on your part. Crypto lending is basically giving your coins to a platform to loan out on your behalf, as I said. Compared with other features like margin trading and futures trading, lending is more suitable for users who prefer low-risk investments and pursue stable returns. It means that lending is a perfect match for holders who can keep their coins and earn extra profit. Now, while lending offers the least profit of the bunch here, it does provide the safest means of investing in the crypto space, as your funds are safe and aren't lost in the hustle and bustle of trading. It is also user-friendly to new crypto investors who can lend crypto assets to earn passive income with several simple clicks. I'll be making a video showing you how to lend out your coins on KuCoin and earn passive, sure and safe returns on your investments. Now there you have it, guys. These are my top picks of the safest investment strategies to earn in the crypto space. Now, while the returns I show you on this channel may not be as enticing and mouth-watering as what is shown on the other channels, do note that this isn't a clickbait channel for views. Here we focus on safe, realistic trades. And if done right, and you're willing to exercise the required patience like a Babylonian, Here's a quick view of what you tend to gain 5 to 10 years along the line. Let's head over to my favorite interest calculator site.
So now we are at my all-time favorite compound interest calculator site. This is where I calculate my future projections for any investment I'm about to make, especially the trading investments so far. So here you could see we have the compound interest calculator, simple interest, the daily compounding, and the forex compounding. Now, okay, we are in the forex compounding. So assuming we start off the year with an initial investment of $1,000. Now, following the KuCoin rate of returns, which is the most realistic of the 4 I have mentioned, assuming we are going to be making a 20% returns yearly for the space of 10 years to be compounded, I would say weekly. The reason I say weekly is that your returns on the KuCoin lending are generated weekly. Although it all sums up to be 20 to 25% returns at the end of the year, it is still paid weekly. So you also have the option called auto lending. Right now, my auto lending is enabled. You also have the option to auto lend. So this basically reinvests both your capital and your 7 days returns. It could be 7 days, it could be 14 days, 28 days. So it automatically reinvests both your capital and your returns for the next leg up. So you would be reinvesting both your capital and your returns every week for the next year. So that is why I put it at a weekly compounding. So let us see what it will generate us. So ladies and gentlemen, you could see that a $1,000 investment will generate us $7,360 returns in 10 years without any other capital involved, without any risk to your funds, everything safe and fine. You sleep at night and you wake up in the morning without actually having any form of headache. That to me is an awesome returns. But yet we are going to tweak this a bit. So now, assuming we were to add to our initial investment of 1,000, assuming we are going to add maybe another $200 every year, from our savings. Let's calculate the returns. Wow. You could see that just a $200 increase every year has increased it from $7,000 to a whooping $13,000 returns in 10 years. So assuming KuCoin stays on for the next maybe 20-30 years, if it is something you could just set and forget, leaving it for the long haul, assuming you left this for maybe let's assume 30 years. Oh, okay, let's make it 20 years. Seeing as you're reinvesting $200 every year, or okay, we could even remove the investment in case this was something you set and forget for God knows when, without any form of commitment, any form of monitoring, just setting it and leaving it to run itself. Let us see the returns. Guys, in 20 years from an initial investment of $1,000 without any other included or added capital, you will be making a $54,000 return on your investment. Isn't that just awesome? So awesome. This is the most conservative of the 4 strategies I have mentioned. Going on to the trading bots, which gives the next conservative form of return so far. Assuming with an initial investment capital, we could see that from my open bot, I have managed to make, I think, okay, the bot, I started up the bot on the 29th of September 2021, and this is the 12th of October 2021. So let's assume 13 days, call it a week, 14 days. So I have managed so far to make around, right now I'm at $53, and I started with an initial investment of $600. So assuming I'm at a 9% increase in the space of 14 days. So this means that I could be looking to make somewhere between 18 to, even depending on how the market goes, I can be making between 18 to 30% increase monthly, which is very beautiful. But now the conservative side and the realistic side, assuming we are going to make a 10% increase monthly from our investments, which was to be compounded monthly, which was to be compounded monthly for the next 10 years. Now, without making any other addition to our capital for the next 10 years, setting it and leaving it to run itself. But also remember that, okay, these are bots, yes, they run themselves, but they do need monitoring from time to time to make sure everything is going as planned. So let's calculate the returns we are expecting. So guys, well, although I feel this may be a bit unrealistic depending on the market volatility, at a point, the higher capital you open trades with, the more your capital tends to shake the market and the more the returns tend to be inconsistent. But then, following the principles, if they were followed in these terms, you would see that a $1,000 investment with a 10% return monthly for the next 10 years will be generating you $92.7 million in returns. So now I am hoping you see the power of the slow and steady compounding, the snowball effect, the Kaizen strategy, the Babylonian principle. You could see that slow and steady tends to win the race. Why? Because in these strategies, you are focusing more on risk management than profit generation. In the crypto space, it is so common to hear of 10x, 20x, 30x, 40x, 5x, 6x. Nobody is looking at percentage returns anymore. Even the traders are looking to get maybe a 5% increase in a day, but they are all subject to volatility, the highs and lows, the profits and losses. So these are following the most conservative principles in the markets right now. Following the most conservative principles of making just a little 10% returns monthly. Gentlemen, ladies, this is what you will be getting in the space of 10 years. If you weren't impressed before, I am sure you are impressed now.
Alright guys, that's it for this video. I'll be making out other videos showing you how you can set up and start trading using the several trading terminals and bot terminals I've mentioned so far in this video. For now, if you'd like to register on any of these platforms, 3Commerce, BitsGap, KuCoin or Binance, using my link below not only helps me reduce my subscription fees to offer more videos, but you also get a percentage discount on your trading fees as well. Also, make sure to subscribe to this channel and hit the bell icon to get notified when I upload new videos and update you guys on the progress of my various trading strategies as we go forward. Thanks for watching guys. See you in Babylon.